I don't think anyone should be in any doubt at all about my commitment and this government's commitments to the fiscal rules. We recognise that they underpin the stability that we need, but also the economic growth that is built on that platform of stability. So you will see in the autumn that we will continue to meet those fiscal rules.
Well, good morning, and I'm delighted to be joined here with the Chancellor of the Exchequer, Rachel Reeves. Do go and get some water. Get some water first. Chancellor, the UK government is seeking to sell or issue over £300 billion of UK debt this year. It's roughly 10% of GDP. In the audience here, we have many of the potential buyers of that debt. Why should they invest in UK gilts?
Thank you very much, Chris, and for having me here today. I think you've already heard from Jessica this morning about our plans and debt issuance and maturities, etc. earlier today. Why buy British gilts? Well, we have deep and liquid markets in the UK under what this government has done over the last 10 or 11 months. We put public finances back on a firm footing. Fiscal rules that are non-negotiable, but also economically and fiscally sensible. So the stability rule that we have to pay for day-to-day borrowing through tax receipts, and we will meet that according to the Office for Budget Responsibility 2 years early. And then the investment rule that says that we need to get debt down as a share of the economy, but subject to that, invest in things that will help grow our economy. And those are sort of two pillars of our economic strategy, the sort of fiscal stability, but also the growth-orientated policy, which I think whether it's on trade, regulation, planning, capital markets reform, growth-enhancing policies, at the same time as getting our public finances back on a firm footing, which I think should give investors confidence to invest in the UK.
Let's talk a little bit about growth. It's the mission of the central mission of this government. Clearly, the performance of the UK economy last year, immediately after you came in, was a bit disappointing, but we had a very good first quarter and then a bad April. But we know that in both of those numbers, there's a lot of one-offs in the figures. How confident are you that the growth performance of the UK economy can improve on an underlying basis over the next 4 years?
I've got a lot of confidence in that, because we are right across government. This is certainly not just a Treasury-led endeavour, pursuing policies to improve our long-term growth performance. So not short-term sticking plaster policies, but actually dealing with some of those sort of fundamental reasons why the UK's growth and productivity performance have both been pretty poor this last decade or so. So, for example, our planning policy and the Planning and Infrastructure Bill has just passed its stages through the House of Commons, will now go to the House of Lords. That will get royal assent by the end of this year, making it easier to get things built in Britain, whether that is housing, energy infrastructure, digital infrastructure, or transport infrastructure. There's the creation of the first ever National Wealth Fund, which is investing alongside business, crowding in private sector investment, particularly in areas of clean energy, but also in defence and other parts of the economy. There is the infrastructure investment that we really prioritised. We had to make some difficult decisions in the spending review last week, but what I'm most pleased about from the budget last year and then the spending review last week was that we were able to prioritise capital investment by making some pretty tough decisions on day-to-day spending, and that's unlocked more than £100 billion of investment that wouldn't have taken place under the previous government's plans and the previous government's rules. And I think that investment is significant. And then there's the capital markets reform as well. So the pensions bill is just about to start its process through Parliament. That will see a big consolidation of pension funds, taking local government pension schemes from 86 different administering authorities down to 8 pools, as well as consolidation of defined contribution pension schemes, with the aim of creating a smaller number of bigger schemes to make better long-term investments, and again to unlock investment in the UK economy. And that builds on what the Pensions Minister Torsten Bell set out a couple of weeks ago, which is the Mansion House Accord, where 19 of the biggest pension funds in the UK have signed a voluntary accord to invest 10% of their assets under management into private assets and infrastructure, which can really help the UK economy grow, and half of that will be allocated to UK assets. And then, of course, yesterday we had the good news that the UK-US deal on automotives and aerospace has been signed. We are still the only country in the world to have secured a trade deal with the US, and the first part of that will now come into effect. But we've also done a trade deal with India, the most comprehensive trade deal that any country in the world has done with India, and also the improvements in our trading relationships with the EU. So plenty of reasons to be confident about the UK's longer-term growth and productivity performance, which is absolutely essential, both for lifting living standards, having money to invest in public services, but also to achieve those reductions in debt as a share of our economy that I'm determined to do as Chancellor.
The Office for Budget Responsibility so far has given you some credit for these policies, about 0.1 in the spring, or in the autumn, and 0.2 in the spring. That's not to be sniffed at in a long time. Do you think they're not optimistic enough in terms of the credit they're giving you for the long list of growth-enhancing measures you've just set out?
I think it's right for the Office of Budget Responsibility to be cautious when they're assessing the impact of government policies. In the spring statement, they scored £6.8 billion of benefits to the UK economy through just one small part of the planning changes that we have made. It doesn't take into account the planning and infrastructure bill, which is still going through Parliament. We're hopeful that that will have a bigger impact on the ability to get stuff built in Britain. In addition, we're introducing quite comprehensive welfare reform to get people back into work. We think that will reduce the burden on the public purse, but will also improve participation in the labour market. The trade deals anticipated that both the India deal and the EU deal will have a positive impact on the size of our economy. So I think there's a number of areas where there is potential for what we've done already, but also what we have in the pipeline to enhance our growth performance. But I think it is right that the OBR are both independent but also cautious when making these assessments, and we need to provide the evidence and to follow through on what we're legislating for.
Now, one of the things that we know the OBR is doing over the summer is looking at its past performance, particularly in assessing productivity, where it's been persistently over-optimistic. And we also know that the public finances are most sensitive. If there's one thing they're sensitive to, it's the productivity assumption. If the OBR does what nearly all other forecasters have done and actually scale back the assumption because of its past over-optimism, that could put the fiscal rules in some trouble as you come up to an autumn budget. If it does that, and given you've said the fiscal rules are sacrosanct, would you think more of making adjustments on the tax side or making further savings? How would you think about adjusting to that?
The OBR will take into account a number of factors when they do their forecast ahead of the autumn budget. And just a reminder that, we have moved to just one major fiscal event a year. I think that is an important change to give certainty to investors, certainty to British businesses and families around the tax environment. We have set that envelope for public spending for the next few years. 3 years for day-to-day spending, 5 years for capital investment. So, we'll work with the OBR over the summer. I think there are things, moving potentially in different directions, but certainly the growth-enhancing policies on planning, on regulation, on capital markets and the trade deals should all contribute to a sort of a positive environment for the growth and the size of our economy.
Do you think the UK public finances are, now you've done a trade deal with the Trump administration, Do you think they're relatively immune or relatively unlikely to be affected by whatever happens in the US, the global economy, and of course what we're seeing in the Middle East at the moment?
I wouldn't go that far. I mean, obviously, the biggest impact of tariffs is the global tariff environment rather than a sort of a bilateral tariff. And so we don't just want to achieve a trade deal for ourselves. We want other countries to see the achievement of trade deals as well, which is why we hosted the US-China talks just a week or so ago in London, because we want to work with countries around the world to reduce trade barriers. That's very important for the UK, especially as a global trading nation. But we are in a favoured position now compared to other countries around the world, and we will definitely seek to exploit the benefits of that. If you're trading with India, with the EU, or with the US, Britain is now a better place to be trading from than almost any country around the world, and we should use that to our advantage, as we already have been very successful of attracting inward investment. I think also sort of a wider point, really, that in a very uncertain world and the sort of age of insecurity we live in today, I hope that people are increasingly looking at Britain and seeing a sort of an oasis of stability, where we have a stable politics, stable economy, and also tough and robust fiscal rules, which this government is determined to stick to, as well as a government that is squarely focused on growing the economy, which is both good for the borrowing and debt, but also good for our just longer-term prospects as an economy.
With a government that has a large majority in Parliament and has state stability at least for the next 4 years in our politics in this country, do we need to be telling the public that actually the world out there is a difficult place? We might have a lot more commitments to make on security and defence in the years ahead. There's a NATO summit coming up this month where there's going to be a new target of probably 3.5% of GDP. Okay, not by the end of this decade, but quite soon in the next decade. Do the public now need to be thinking that ultimately we need to be paying more tax as a society?
Well, having a bigger economy benefits all those things. We can do more on defence, we can do more on investing in our intelligence agencies, as well as supporting our public services and that wider capital investment if the economy is growing. But we've already made decisions to increase our defence budget. In the spending review last week, I set out more than £10 billion of increases by the end of the forecast period on defence spending. But that was all fully funded by a reduction in our overseas development assistance budget. And that was the right thing to do, because the world is changing. We can all see that around us, and we've changed our policy priorities as a result of that. So taking spending down on overseas development from 0.5 to 0.3%, and then at the same time increasing defence spending as a share of the economy from 2.3 to 2.5%, but also adding in some of the intelligence spend that is so important for our national security and defence. That will actually rise to 2.6% by 2027. So that's an example where we needed to spend more on something, but we did that in a way that was fully costed and fully funded, and we've explained where the money's going to come from to meet that ambition.
It's still quite a long way short of the 3.5% NATO target, which is almost
It is, but it's the
set.
biggest sustained increase in defence spending in the UK since the end of the Cold War, and we're getting there within 2 years by fully funding it. The spending review that I set out last week was 3 years of day-to-day spending and 5 years of capital spending. We will do another spending review in 2 years' time and update those forecasts. But we have now set that sort of spending for this Parliament. Any further increases in defence spending would be in a future Parliament, and we would seek a mandate to do that, but we would do that in a way, again, that was fully costed and fully funded in a way that is consistent with everything that the Prime Minister, Keir Starmer, and myself have said about how it's important with all spending decisions to explain where the money's going to come from.
Now, you've been very clear that you want to have one fiscal event per year, and quite recently the IMF were in town and were pretty supportive of your policies. But they said that actually it wasn't really working. They said there was a lot of instability, particularly ahead of the spring statement, and then you changed policy in the spring statement. You cut spending a bit to ensure your fiscal headroom was the 9.9 billion, the same as it was in October. But more than that, there was a huge amount of speculation in the weeks and months before the spending review. The IMF said, well, why not hold just one event a year or have a formal process whereby small breaches in the rules in the spring don't have to be met so long as they're met in the autumn. How do you feel about those suggestions? Are they helpful from the IMF?
I've thought that the IMF Article 4 report on the UK was very positive. I was very pleased to read it, pleased to engage with the IMF. I think whilst they were here in the UK, they visited Cambridge and looked at some of the work we were doing around the Oxford-Cambridge corridor, which they were very impressed with. And the conversations I've had with both Kristalina and Geeta Gopinath at the fund have been very positive about what we're trying to do. And at the IMF spring meetings this year, I spoke on a panel with Kristalina, and she was very supportive of what the government are trying to do in terms of both fiscal consolidation, but also the reform agenda, which they've long advocated for. I do think some of the reforms we've made in terms of the fiscal framework are things that have very much been advocated for by the IMF. So moving to have just one major fiscal event a year, we're often encouraged by the opposition and sometimes our own backbenchers in my party to have another fiscal event, and we have not heeded those calls. And the spring statement was, an update on the economic situation, an update on the fiscal situation, and we were able to take measures primarily on the welfare side, which we want to make from a reform perspective, that enabled us to close that gap and restore the headroom to where it had been before. And we will have a proper budget in the autumn like we did last year, and that is something that we are committed to. Now, in the fiscal rules that we set out in the budget last year, we have said that we will introduce a range that we could use between those major fiscal events. We're not using that straight away. It's a couple of years before we get there. But that is to address some of those concerns that the IMF have got about how to build stability into the system and not changing fiscal policy because of sort of short-term headwinds, but wait until a budget when you've got more room for manoeuvre. I think that the IMF are supportive of what we're doing to try and embed stability in the fiscal framework.
Is it really the case that we do have lots more stability? This is, I suppose, a question which has been quite current recently because we've seen changes to winter fuel payments. We've seen speculation in today's Financial Times that you're going to change the non-dom regime again to make it a little bit more generous. There's a lot of speculation about the two-child limit in benefit policies. It doesn't feel as if there's always, it feels like there is a constant debate about these policies. And, how can you guarantee that you will meet the fiscal rules and make sure that the fiscal position of the country is your top priority?
I mean, that's what we campaigned on. We said that we would return stability to the UK economy, that we would live within our means. The OBR have now done 2 forecasts. In both of those forecasts, they've said that we will meet those fiscal rules. Indeed, we will meet both the stability and the investment rule earlier. When we were faced with challenges in the spring, we returned the headroom in full. And I think that should give confidence to people that last autumn we took the measures that were necessary necessary to put the public finances back on a firm footing after inheriting an in-year gap between commitments and revenues coming in of £22 billion. We closed that in the autumn. We then returned the headroom in full in the spring. I don't think anyone should be in any doubt at all about my commitment and this government's commitments to the fiscal rules. We recognise that they underpin the stability that we need, but also the economic growth that is built on that platform of stability. So you will see in the autumn that we will continue to meet those fiscal rules.
So 9.9 billion, absolutely minimum amount of headroom in the autumn, sometime October, November. When's it coming? When's the budget coming?
The budget will be in the autumn.
Thank you. Rachel Reeves, Chancellor of the Exchequer, thank you very much.